Hi and welcome. Today we are going to talk about Ethereum and its London fork update and how it has been going so far. So since the activation of Ethereum Improvement Proposal 1559, the network has removed from circulation or burned over 11,000 Ether worth roughly $32 million. So the cheapest gas price is about 34.5. Median gas price is 54. The cheapest transfer fee is about $2.4, and the highest transfer fee is about $13. So in general, EIP 1559 seems to be working quite effectively, burning fees and pricing block space on Ethereum dynamically, so that block sizes on average hit a healthy target. However, it might not be that effective when it comes to making fees on the network more predictable for users. Blocks being mined on Ethereum oscillate dramatically from being 100% full to empty. According to Team Bako, the chair of the bi-weekly All Core Developers meeting, it happens because the pool of transactions eligible to be included in a block gets smaller and larger depending on the minimum fee or base fee decided by the network. In his interview with CoinDesk, he explained, say you have a block that raises the base fee because it's full. It's possible that by the time the next block shows up, there's just not been that many new transactions who are willing to pay this higher price. Well, that can lead to a number of problems, but the major one is a lack of fee predictability and stability for the average user. Because for the average user, it's hard to predict what the fee will be for the next couple of minutes. According to Bako, anticipating what the optional transaction fee on Ethereum will be in 3 or more minutes is just as difficult with the update as it was before. And the update helps price transactions for users in the moment, but it doesn't help users predict or anticipate what fees will be in the next moment, because the supply and demand dynamics for block space fluctuate with each block. Bako also says that such oscillations impacting block sizes and base fees were always expected from EIP 1559. However, he believes the average user can still benefit from knowing the optimized base fee of sending a transaction on Ethereum in the moment without having to guess or anticipate fees of future blocks. If users are confident that fees will increase during the next block, they will include more transactions in the current block than the next one. However, if users are confident that fees will decrease during the next block, there is a financial incentive to include more transactions in the next block than the current one. And such natural oscillations between heavy and light blocks may mean the amount of gas used in each block will trend over the long term above the block gas target, which can create difficulties for network node operators responsible for maintaining transaction data. Mojtaba Tafa, assistant professor at Sharif University of Technology, says, if the variability in block size is high, people can send more transactions on average. So if you just adapt the extreme oscillation of alternating between a full block and also an empty block, you can spend much more gas than the target and still the base fee would not go up. We are incentivizing people to create volatility, and as they create volatility, we let them spend more gas. Of course, for now, full impacts of EIP 1559 on the usability of Ethereum for users are not quite clear, and we all need more time to see what happens. So let's be patient and hope for the best. And one more interesting news is that according to the second quarter 2021 market observation report by Genesis, a big cryptocurrency lending and trading desk, Ethereum has taken a relevant part of the market. Genesis saw this currency take a big part of the interest from Bitcoin, which has been traditionally the go-to cryptocurrency for institutional investors. Bitcoin's dominance in terms of market cap declined from over 70% at the end of 2020 to under 45% at the end of the second quarter 2021, as Ether more than doubled its price from the beginning of the year. According to the report, Bitcoin trading accounted for almost 47% of the total trading done at its platform. However, the number marks a sharp decline from the 80% share Bitcoin commanded during the second quarter 2021. Most of the market share lost by Bitcoin migrated to Ethereum, which accounted for 25% of the volume traded in the same period. Not bad, huh? And that is all for now. Have a good day. Bye.